Hey folks, Dan Frio here, the rate update. Today we're going to talk about why are rents so high? Housing in general, why is it so high? And it's not only when you're buying, it's also when you're renting. So I found a caption on CNBC that explains a lot of this. So don't go away, that's what we're going to talk about next. Because this is my business. This is my passion. I love mortgages. I love real estate. I love housing. It's all I've ever done since I got out of college. And right now we have basically a disconnect on housing prices and rents and wages and all this other stuff. So I found a really sweet video that CNBC did. And it kind of lays out the foundation of a lot of pieces of this puzzle that's causing all of these issues. And so watch this video. It's about 5-8 minutes long, but it is very informative. And when we come back after the video, please stay tuned after the video because we're going to break down each component. I'm going to show you charts and what my thoughts are on where we should be in 2022. So watch this and we'll be right back.
Rent in America is getting more expensive, no matter where you live.
Rent growth has accelerated coast to coast in big cities, rural areas, east, west, south, north, just across the entire economy.
The areas where we are seeing the strongest rent growth are in places like Austin, Texas.
Yeah, so my name is Maria and I live in Austin, Texas. During the pandemic, a lot of people began to leave and actually the rent dropped that year by $100. I am due to renew my rent and there was a spike of $400.
Making matters worse, few of the new homes in construction are affordable.
Rental demand continues to be extremely strong, and the rental units that are being built are the more expensive ones. That is the higher end ones.
Meanwhile, workers' pay isn't increasing enough to match the new rent.
We had wage suppression for 40 years, and then we have the period now where wages are growing, especially at the low end. And so the question is, how long will that continue?
Experts say the rent increases will have an impact on the economy.
A lot of the monthly expense for the typical household is money that's going toward the rent or to upkeep of the house. So it is a very important part of all of consumer expenditures.
In the most competitive markets, rents are creeping toward record highs. Renters in smaller markets are feeling the squeeze too. For example, one-bedroom rentals in Gilbert, Arizona spiked over 116% in the past year. Meanwhile, rent for a single-family home is growing at its fastest pace since 2005, according to CoreLogic. So how did we get here? One answer is the bounce back from the pandemic.
You saw tech companies, major firms moving to smaller cities, cities like Pittsburgh, Austin, San Antonio, Charlotte. These are cities that really started booming because workers had more flexibility. And when the city starts booming, of course, the rents go up because it's a supply and demand issue.
But the story goes back further than that, all the way back to the Great Recession.
President Obama, are you listening?
This has been building really since the end of the financial crisis back a little over a decade ago. A lot of communities have made it more difficult to build more homes closer to the urban cores. Building materials, particularly lumber, has been in short supply. That's been a problem. Labor, a lot of people left the construction trades in the housing bust back a decade ago. And because of changes in foreign immigration laws, we have a lot fewer foreign immigrants coming into the country. Many of those folks would work in the construction trades. Also, a lot of smaller builders, they rely on loans from banks. And since the financial crisis, banks, particularly smaller banks, mid-sized banks, have been unable to, because of regulatory changes and other reasons, unable to provide enough loans. So, there's a melange of things going on here.
After the financial crash of 2008, house building stalled. By the end of the tens, renters had fewer options, especially in real estate hotspots.
Pre-COVID, we saw a huge rush to urban centers. Millennials love to live in cities longer. They were actually living there longer than the previous generations their age had because they weren't able to get out and afford to buy homes because home prices were so high. So you had so much demand in the cities.
Then the pandemic hit.
So if you look at some of the high-rise apartment buildings in the really dense central business districts, the big cities, rents were actually declining in the first 12 months of the pandemic.
But smaller cities like Phoenix and Austin received more of those remote workers. That sent prices upward for people like Maria.
Right now, I would say for a studio is probably $2,000. This place, it's a one bedroom, was originally set at $1,700 when I first moved in.
Maria is a teacher and needs to commute to work every day. She and many other Americans don't have the luxury to move further away from work to save cash. That's creating wider issues in the economy.
There's a lot of evidence that the lack of housing closer to where the demand is in urban cores is having a meaningful negative consequence on long-term economic growth. So if we can figure out a way to change zoning rules and laws and get the lumber and land and labor that we need and able to build closer to where the jobs are, our economy will be able to grow more quickly, more strongly in the longer run.
Renters in the traditionally cheaper suburbs are feeling the burn too. Economists say that finding any home to rent right now is uniquely difficult.
Because the vacancy rates are really so low. It's the lowest we've seen in a generation.
Coming out of the pandemic, it's likely for rents to keep rising.
Fortunately, builders are ramping up their building. They can make a lot of money, with rents this high and house prices this high. So they have a lot of incentive to put up more homes, and that's happening slowly but surely. We are seeing more homes put up.
So that's a good sign. And we've seen an increase in single family housing starts. That's really important because that's the preferred housing structure during the pandemic. So having investors come in, buying homes, maybe puts a little upward pressure on home prices. Sure, maybe it does. But it does increase the stock of single family rental homes available in the market and should help to moderate rent growth.
And in the cities, some realtors are weighing whether to convert their less busy office districts into residential neighborhoods.
The idea is to say that there are some empty buildings, brick and mortars already established, but maybe one can repurpose it into residential units.
For the short term, renters are dealing with the market.
If I had signed the lease, it would be taking a lot of my savings. And so I decided to move to a new building. I'm losing about 150 square feet.
These hikes are hitting U.S. citizens at an inopportune time. Over decades, wages for most workers have stagnated.
The wages and benefits of a typical worker were suppressed in the period 4 decades after 1979. Growth was very slow. There was growing inequality that worked against the middle, in effect, against anybody in the bottom 90%.
In 2019, Oregon became the first state to impose statewide rent control. They cap increases at about 7%. Cities like New York, San Francisco, and Washington, D.C. also limit rent increases. These policies have some benefits. One study found that renters were about 20% more likely to stay in their homes with rent control. Other economists think that rent control does more harm than good.
So what history has shown is that by putting a rent control, yes, it's benefit temporarily for people to pay lower rent, but that deters incentive to build more homes or provide money for maintenance. So all the housing stock steadily deteriorates over time, and one does not want to see that. So we want to encourage more production.
The answer to rising rents may be in the job market. Both Congress and the Fed have pumped stimulus into the economy. It should, eventually, help some workers earn higher wages.
There's been a huge increase in the demand for goods and services. So we're going to see a period of sustained low unemployment, I think. This has always led to faster wage growth for those in the middle and the bottom. The other related question is, will we see the structural changes that will build this into the economy rather than be an episode of a period of low unemployment? And I think that will require improving labor standards, putting in the $15 minimum wage, rebuilding collective bargaining. I think it will mean paying attention to maintaining low unemployment.
Which means that the answer to rising rents might be getting yourself a raise or finding roommates.
They're not building enough affordable housing right now because for builders, the cost of construction is so high due to a high cost for land, labor, materials, shortages for materials, shortages of labor, that they can't build affordable housing.
It took us 10 years to get into this, predicament. It's not going to be solved next year or the year after. It's going to be 10 years before we solve this problem.
So I hope you found that pretty interesting. So let's break it down in like components. Okay, let's break it down in components, just make it a little more easy to understand. So the first thing is we have right here is these are the headlines that we just went over. And it's basically why rents are going so high. And you watch that video. So now let's go into each component that they discussed. So the first thing I want to talk about is housing starts. Okay, so look at the trend that we had there for a while. Okay, let's just draw a line through it, and we're going to go up through like this here. Let's just make it a normal curve up through here. You see this dip? Okay, we had a little bit overbuild here, but then look at this decline, and it's not just like it went here to here. During this time frame, we had less and less and less properties built. Okay, then we started to come back to reality a little bit. Okay, so that's one of the areas that they spoke about. They said we are underbuilt. And so let's get to a 5-year chart to kind of explain this a little bit more. I'm sorry, let's go to a 10-year chart to explain it a little bit more. Look at the trend line you see here. Okay, if you were to draw a line through this to make it, you'd kind of go through here. All right, right through here, look how many hundreds of thousands of properties were not built. That's how much we have to come back. So you can look at in the latter part of 2019, we were maybe there. Then we spiked up just a little bit, and then it was a debacle since. So yes, there is a housing shortage, the number of houses being built, okay? The next thing we want to see is what is the vacancy rates on properties, such as rentals. So rental vacancy rates. You saw in the video, they said it's currently at a 5.4 figure. It hasn't been that low in decades. Okay, so that's an issue there. So if we break down these two components, let's break it down. The rental occupancy rates there's a 5% vacancy factor. Five. Okay, so that means there is a huge demand for housing. Okay, then the next thing is we saw housing permits or housing starts drop off the charts in 2019, 2020. Okay, now they're starting to come back. Well, think of it as this. What's my best analogy I can make? Let's say I used this one this morning, toilet paper. There is, all of a sudden there's they stopped making toilet paper for a year. What do you think would happen to the demand for toilet paper? Well, it would go up and up and up until there's an alternative. Well, it's kind of hard to have an alternative to toilet paper. Kind of similar to it is to have an offset of the housing market. Okay, so hopefully you see that. So then when they start manufacturing toilet paper again, people start just hoarding it. And they're like, oh, I just want toilet paper. Maybe a bad analogy or a kind of a crappy analogy. I'll put it down. That's my pun for the day. So maybe think of it that way. If there's a huge supply, so the demand as we see in the charts is there. The supply is lacking. So this proves that there is a supply issue because the demand's there. That's also why I'm also saying there isn't going to be a housing crash. There are people getting hundreds of thousands of clicks on their thumbnails. Then you watch the video and it's housing crash, and it's the buzzword right now. People, you click into those videos and then it's, oh, okay, well, here's what might happen or whatever. So they're getting the clicks on the thumbnails because they say housing crash, but I think that's a little deceptive. So I try to build content into here that you can use for value. So now let's get to the next piece of this puzzle is we're going to go through sequence by sequence is lumber prices. Okay, here's lumber prices since 2017. The average, let's say it spiked here back in 2018, the middle of the year, at about $650 for lumber. But the average is, let's just say it's right through here, about 500, okay? back at the latter part of 2021, it hit, let me see if I can even find it up here. It's up here, but it was like $1,700. So that's over 3 times the amount on the price of lumber. So now you have the pieces of the puzzle in housing just went up exponentially. Okay, so that's another piece of this puzzle. A lot of people don't think of this part either. Hate to say it, but it's just a reality in today's world. Immigration. A lot of immigrants come here and in construction, in landscaping, in agricultural. That's a huge miss that we have right now. Okay, there's a lot of people that aren't willing to do jobs at those wages, and that is hurting the economy. And again, guys, this isn't a political channel. I'm just giving you the facts behind the scenes. If you have less labor, you have a labor shortage, you have a supply shortage, how are you going to build things even if you need them? Okay, so that's the next piece of the puzzle. I don't have any of the data on that because that is a political trigger there. And you can really, I don't trust any of the numbers that I see in that part of the equation. So we'll leave that at that. All right, and then let's dig down a little bit more. The unemployment rate. Look at the unemployment rate. Okay, this again goes back to you have supply chain issues, you have supply issues, you have labor constrictions. This is the unemployment rate. Look at it. It's usually somewhat steady to a point where this chart's pretty bad, but look at the unemployment rate last year, 2019, 2020. Nuts. Okay, so you don't have any labor. You have a lack of materials. You get my point. I don't have to keep drilling this point down. Here's another thing that people don't think of. Why aren't people going into the trades? Okay, so let's get to another area of the economy. This is what I've been saying is why people right now have a lot more money and why I think inflation rates are that high is because people have more money than they normally have. Even with these unemployment numbers, sorry, I'm flip-flop in the camera. People still have more money because of the government stimulus behind everything, all right? So that's one of the things. But what people lack is, one other cost in life is this. Let's look at college tuition, just for kicks. Amuse me here for a second. In 1977, college was 20 grand. Today it's 2021. Okay, that's a long time. So let's go in here and say, well, how much was it back in? I'm sorry, I grabbed the wrong chart. How much was tuition back in? Just say 2000. $114,000. Okay, so you're going to see that right here. $114,000 for a 4-year degree. What is it now? $305,000. Triple in the last 20 years. Triple. Okay, you don't hear anybody complaining about this, which you should be. This is a disgrace to this country. And I'm going to leave it at that because, again, this isn't a political channel. So I hope you get value in my videos, especially this one, because we're debunking the issue was, guys, there isn't going to be a crash. The demand is there, okay? The jobs are there. You can see the JOLT index. I post the JOLT index when it comes out each month. JOLT means the number of job openings. Basically, we'll leave it that way. There's 11 million job openings that just came available. The unemployment right now, the figures just came in, and we got about 1.2 million unemployed. So we have more jobs, a ton more jobs than we have unemployed. Why aren't people going back to work? I can't put a finger on it. I'm not trying to say people are lazy. I'm not trying to insinuate anything. I don't know. And I talk to people all over the country that don't know. I put a survey out in YouTube today, so if you go to my channel and check out the surveys, let me know your thoughts on that. So that's my debunking the housing crash all in one video, showing you why prices are going up. And even they're going up if you're looking to buy a house, if you're looking to rent a house, if you're going to college, prices are going up everywhere. We got to get a little bit normal, guys. What happened in the past year, again, I'm going to say this again, we had forbearance. What forbearance was you didn't have to make a mortgage payment for 1 year to 18 months. Okay, You didn't have to make a student loan payment for a year and a half. Again, if you didn't have those two payments, what bills would you have? A car payment and a couple credit cards? You know, in my case, that would free up thousands upon thousands upon thousands of dollars a month that I can use. And I go to Florida probably every other month to go down to my home down there, and it is packed. Disney World's packed. All the restaurants are packed. All the amusement parks are packed. So there's money out there, but you guys figure out what's behind the scenes. I'm not going to say it. Again, it's not a political channel. I'm not looking to go down that realm. But what I want to explain here is I don't foresee a crash in the housing market because the demand is there. Price stability, it'll start to come down and come a little neutral. Will prices come down a little bit? Maybe. Will they stagnate? Maybe. Are they going to crash? I do not see that unless there's something catastrophic that takes place. So again, all I ask you to do is please give me a thumbs up, subscribe down below, hit the bell every time I post a video. You get an alert. If you'd like to reach out to me or find out more about me and what I do, please go to The Rate Update. I'm going to plug that in right here, therateupdate.com, and you're going to see that right here. The best way to get a hold of me and my team is best way to probably do it is give us a call, 844-775-5626. If you're on the West Coast, we're in Chicago. If you're on the West Coast, you get home, by the time you get home, we're not here, whatever, please don't hesitate. Click right here. Schedule an appointment with me or one of my mortgage advisors. We'd love to talk with you either by phone or by Zoom. Just let us know what day and time works best for you. But if you're like, Dan, I know I need to refinance. I'm afraid that what the Fed's going to do tomorrow. I really want to get the ball rolling, lock in, and go from there. Please just start the application. It's as simple as just clicking right here. It'll take you about 10-15 minutes, but you'll basically do your whole loan. You'll put everything in the system. You'll upload all your documentation. Give me about 2-3 days. You'll get your disclosures out. We're closing loans in about 10 to 12 days right now. So if you're looking to get closed by the end of the month, we can still get that done. If you're looking to buy, build, refinance, cash out, do consolidation loans, whatever you need, please reach out to us. We'd love to help. So thank you so much for watching, guys. God bless. I'll see you tomorrow morning. Bye-bye.